Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we are looking at StarBucks, ticker symbol SBUX. We're going to see what institutions and hedge funds are doing at this relatively historical low price. We're going to look at my stock price projection calculator to see if $75 or $76 is overvalued or undervalued. And we're also going to do some advanced charting on Think or Swim. We will do some Fibonacci work and also, ooh, I'm thanking my past self. My future self is happy because my past self has set this up perfectly. And it looks like I'm pretty close to my box. I mean, the bounce box. So without further ado, let's go ahead and jump on in. We'll come back to this chart. And I'm going to shrink my head for your viewing pleasure. Shoo, 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 shoo. All right, Starbucks 75.88. Looking at the technicals, bears are in control on the strength RSI. MACD, I mean, it kind of looks like we might be at an inflection point. And I only say that because it looks like our momentum is kind of turning around right here. And lo and behold, it looks like our money flow has stopped going down, has consolidated, and it looks like it might be potentially going up. Our relative momentum indicator has been going down. It will have to just kind of go with our MACD here. So overall, I would say neutral to bearish. However, I mean, it looks like it is holding up on this $76 support so far. Let's go ahead and just take a peek here. Sales, I mean, this is beautiful up and to the right, kind of like a swoosh. EPS is all over the place. Trailing 12 months, they're at 36 billion in sales, already surpassing 2023 on a 12-month rolling basis. Quick ratio is under 1. That is a reddish flag. If they did close their doors tomorrow, they would not be able to pay off all of their debts, loans, notes, etc. So a little bit of a concern there. They do offer a dividend. I don't know why they cut the dividend or reduce it and regain some of that cash. It's not showing their debt here, so I'm pretty excited to go down and look at the data and see what we can dig up. Gross margins, 22%, not bad. This is a brick and mortar kiosk-esque type company. We see them have their own little shops inside of plazas, standalone shops, inside malls, you name it. Forward P our PE is 21, typically like the 25 or the $15 area. Sorry, 15, not dollar, 15 PE. Forward PE. We do like the forward PE to be less than the price to earnings, meaning if the company continues on the trajectory they are today with earnings, gross margins, revenues, etc., they're cheaper in the future. So this is a good sign. EPS over the past 5 years and sales over the past 5 years are positive. It just goes to show that they are resilient. Other items to call out here. Average volume is huge, 13 million shares. This is a very liquid stock. So let's go ahead and pull up my handy dandy proprietary calculator here. Just a heads up, this gives us the overall trajectory, not the actual price. Although, you know, I prefer it. So they have $85,990,000,000 market cap. Income is $4,070,000,000, and sales is 36,450,000,000. All right, and we're gonna go down and look at some more data. Data. Okay, so just really quick, Q1 this year they did 8.5 billion. Last year in Q1 they did 8.7 billion. So they're down about 1 billion 62 million. Crazy. Q2 2024 they did 9.1 billion. Q2 last year they did 9.1 billion. They did 9.162 billion last year. This year they did 9.105 billion. So again, kind of missing the mark. What really is driving up their trailing 12 months basis is their Q4. So They will have a Q3 and a Q4, but we'll see how the numbers do for earnings. Back to our calculation. They have cash of 3,391,400,000. And debt going to be quite a lot. 23,849,500,000. Crazy. And really quickly, let's look at total assets, 30.1 billion. Total liabilities, 38 billion. When liabilities exceed assets, that typically means a company is bankrupt. We're seeing with a lot of these legacy companies, we got our Papa John's, we got our Starbucks, the liabilities are exceeding assets. And if they did close their doors tomorrow, they would be royally screwed. However, Starbucks, I mean, if I was Starbucks, cut that dividend, make your business more sound, take the L for a year on your stock price, but you'll be the strongest coffee company west of the Mississippi. Or, I mean, just all over the world. So, not looking good there. The stock is not cheap enough because we don't see insiders buying. It is still rather high at $80 was the last sell. So I mean, just looking, speaking out loud, it just sounds like this probably could go lower. So we're now going to go ahead and take this and divide it by 1,140,000,000. So we're getting a stock price of potentially $93.03. Target analysts have a target of $87.37. If my calculation is right, institutions are probably buying, right? You would think so, maybe. So institutions, old data shows that 73.7% ownership by institutions and hedge funds. New data shows 79%, so a 6% plus increase. And just keep in mind, there are over 1 billion shares trading. So to get this to rise, it takes a lot of purchasing. So 6 billion, I mean, 6% increase is not a small number. We got our Vanguard increasing 2% and BlackRock increasing 3.5%. And then we have all these other big, large, small, medium firms. We have retirements in here, ETFs, etc. So you can come back in here and look for yourself. Let's go ahead and check the chart. So historically, buying in this is the channel right here. It's the dotted channel. Buying in this dotted channel on the bottom has been very beneficial. Excuse me. I mean, if you would have bought every time it hit this channel, you would have got it at 42. And then selling at the upper channel, 63. Bottom channel here, 48. You could have sold at 82 or held on in 98. Again, bottom channel, 50. Up here at the upper channel, 90, potentially 126. So again, it's going to be interesting. We do have this right here. This will be very interesting for the next earnings. We have this long-term downtrend channel. Look how well these candles are respecting this resistance. This candle confirms it as support, 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 support. I mean, what are the odds the stock gets to $59 in October? We'll see. What I want to do is some Fibonacci arcs and see what we can gather. So the low here is $50.02. Okay, we'll come back and fix it. 126.32 right there. Okay, and this again was 50.02. Okay. Now, what I want to do here is establish confidence with how these candles are respecting the Fibonacci arc here. So what I'm going to do is zoom in for the crew. Perfect test up here, perfect support, perfect support followed by perfect resistance, perfect support follows through, test the support, test the support, test the resistance, test of resistance, perfect test of resistance, test of resistance, resistance, almost perfect support, almost perfect resistance, great support, falls through, perfect support, tested support, resistance, test support, support, perfect support here. Resistance, resistant, great resistance here. Perfect resistance, support, perfect resistance, perfect support, and falls through. So the goal of that was to establish the level of confidence. I think the candles are very well respecting this Fibonacci arc. So what I'm going to do, I believe this might be our bottom right here, 59. And I only say that because we have this down channel with this up channel converging. That is our apex, our area of opportunity. So I'm going to go from 126.32. Come on, baby, right there. Oh, I got the wrong. 126.32 to right here. Okay. I'm going to make the colors different so we can make it easier to distinguish. So we're going to be looking at some perp. All right. So we have this candle, almost perfect support. This candle, great support, perfect resistance, tests out here, tries to break up, falls through, tries to break up, falls through. Perfect support here, perfect resistance, tries to break up, perfect resistance, tests up this middle candle, perfect support, falls through, perfect resistance. Did I just find the bottom for Starbucks? We're not going to know until October. Come on, baby. My mouse is just horrible. Okay. I mean, yeah, 59. If it gets to 59, that would be fan freaking tastic. Another, let's see. I don't want to convolute this chart, but yeah, historically coming down to this channel, it looks like the stock every time all the way back to 2015 comes back into this solid blue channel. So am I a buyer of Starbucks at 59? Yes. Am I a buyer at 75? Maybe. Earnings for Q1 and Q2 both missed. Are they going to miss on Q3? Question mark. We don't know, but the trend says potentially. Looking at any other potential key identifiers that could let us know Starbucks is ready for a move. It fell out of this long-term wedge, so it's obviously bearish. We do have support at 63. So what I could see happen is earnings are bad. It whiplashes down, touches 59. And then that same month where it touches 59, it closes above 63. Just my guess. But I don't see any patterns. I mean, a potential cup and handle, inverted cup and handle here. I do see a head and shoulders, so left shoulder, head, right shoulder. Typically, the right shoulder is higher though, and so the neckline, we typically want the stock to break the neckline. Whoops, wrong button for the wrong chart. So the neckline for this head and shoulders is going to be right here. So the neckline has been broken, which is good. That's when it kind of resets out of that pattern. Yeah, no insane. I mean, actually the volumes are pretty high the last couple months. So volumes typically have traded pretty low. Then we get this huge volume here to the upside, negative, negative, bearish. So, yep, I think we'll see additional weakness in Starbucks. They need a Q3 won't be until gosh. Q3 will be in September. So, yeah, that brings me right to October, our October pattern. So, um Starbucks is a wait and see. I mean, if you have a long-term time frame, like 5, 10 plus years, I mean, consider dollar cost averaging. It's not going to hurt you in the long run. I mean, Starbucks could jump up tomorrow, we never know if they perform an acquisition, uh, do a new share buybacks, the CEO purchases it in a bunch of shares. There's a lot of things that could reverse the stock. And if you feel an inclination that you'd be upset that you missed this move, potentially do a low risk purchase. And on the inverse, if you hold the stock now and it goes down to 59 and you poop your pants, maybe you're overexposed. So it just comes down to own personal preferences, risk tolerances. Um, if you do want to own Starbucks without a lot less risk, consider the S&P 500. Historically, since inception, it's gone up 10%. And I think the S&P 500 is up 12% year to date, while Starbucks is down 20%. So if you don't want the volatility of owning one single stock, consider owning S&P 500. So that's all I've got for you guys. If you've made it this far, consider subscribing. Thank you so much for watching. Have a great day.